going to start where we have stopped last time. And in fact, just to capitalize what we have learned last week, and we discussed about the uh, right. So we will discuss about the global economic growth, and then we'll discuss the Sri Lankan economy, and then we'll discuss about what drives the economic engine, and then we also discuss about the credit as a percentage of GDP, how credit facilitate countries' economy, and Sri Lanka as we compared with other countries, how credit will support the GDP of a country. And then we discuss about the monetary policy instrument and how these monetary policy instrument use in facilitating credit business, right? In details. And then after that, I think we discuss about have you yeah, we discussed this part, no? We discuss about the regulation on credit operations. Under that, we discuss two main areas the regulator look at as far the credit is concerned. One is the management of NPL. Under that, we discuss about the identifications of NPL and the reclassifications of NPL. Ah, hold on. 1 minute. Just give me a minute. Right. Now I had a chat with the maker, so we have option of 8 hours, and next week we are going to take the definitely we is going to discuss about the climate issue as well as the bond, the green issue, right? Green lending and things like that. The new area we are going to discuss. Right. So we'll see. Next week I will tell you whether we'll continue or we'll give another section to start the new section. Right. Now we discuss about these the regulatory aspects of management of NPL, and we discuss about the loan loss provisions and suspension of interest receivables, disclosure of NPL ratio, and then we discuss the management of loan or credit concentration risk area, then maximum amount of accommodation, loan to value ratio, mandatory lending, and marginal requirement and things like that, right? If I'm not mistaken. Okay, I think now where we have stopped here, right? Part execution. Right. Now, what do you know about the parent execution? Right? What do you know about the parent execution? Right. Okay. So, with regard to the parent execution, Uh, uh, Now, the parate word is basically derived from the word, I think, Dutch word, right? Parate. Right? Parate is a Dutch word. Immediate action. If you really talk about what is really mean on parate, we call them as an, it is an immediate action. That is the parate mean in Dutch, right? In Sri Lanka, so we use the recovery of loans by banks Act number 4 of 1990, and that's the act prevailing in Sri Lanka, which is dealing with parate execution. And that was again amended in 2011. There are two amendments in 2011 to parate execution. So banks are restricted to parate rights to recover the loans defaulted. Only such loan amount is more than 5 million rupees. Now there's a issue on that. Why they have earlier there is no any amount limit. No, now from 2011 amendment to your parate execution, what happened? That was the bar is increased up to 5 billion. If I discuss that in little unofficial manner, what the market talk, and this was initiated by Mr. Ravi, who is that? One of our former minister. Maybe for some personal reasons that they said, but I don't know exactly, right? And then, and that is the limit they are restricted to. You can execute your parate more than 5 million, right? Then the issues again, there's an amendment to the same act in 1 of 2011 in the same year, Act number 19. They also defined clearly what you mean by a principal amount. Now, the whether the you can execute parate principal amount plus interest 5 million, or maybe purely the principal amount taken, right? That's the amendment took place in Act number 19 of 2011, right? And there's a very prior to 2005, the bank could exercise parate rights even if the mortgage property was owned by a party other than the borrower. Even for a guarantor, property can be executed mortgage under parate execution, right? But it's a very famous case in everybody's may learn the decisions given by the judge. Famous case called the Ramachandran Chellaya versus HNB. There, the Supreme Court held that property could be seized and sold under the recovery of loans by Special Provision Act, only which the property is mortgaged by the person to whom the loan is granted. So therefore, parate cannot be executed for guarantor's property. But that was in 2005. Before that also, bank used the parate execution for guarantor's property also, right? In 2005, after this Chellaya Ramachandran or Ramachandran Chellaya or whoever, so versus HNB case, basically facilitated for banks to execute this law, right? And then after some time, now again there's another case. All these cases against HNB, I don't know why, right? The Supreme Court further interrupted this judgment, interpreted this judgment in a subsequent judgment given by the HNB versus Javardhana, right? Now that case is something different. So what the Mr. Javardhana's lawyers and argue that Jayavardhana is a director of an organization and he took a loan for that. Then HNB filed actions again the Jayavardhana being a director of an organization, and a loan was taken to the loan to the company. Then what happened? And Javardhana's lawyers are trying to quote that the previous judgment given by Supreme Court under the Ramachandran versus HNB, because the third party cannot be executed, right? But again, the judgment was given saying that because the Javardhana, where it was held that parat execution can be exercised against the property mortgage by a director of a company, right, to which the loan was granted. So therefore, if you are working for for performing as a director for a company, so that again that is not a third party anymore. It's not a guarantor. It's also a principal. So therefore, the parat execution can be carried out. Right? Okay. That's the situations about the parat execution as far as the credit is concerned. Right? Okay, now what is the topic we are discussing? The topic what we are discussing is basically how the regulatory and the legal aspects impact the your credit businesses. You need to know a little bit of these things. Now, the reason judgment is a controversy thing. That is again, some of you are maybe aware. Okay, just me ask from. Are there any Puta? Are there any HNB students who are participating this? Right? Are there any HNB students who are involving in joining, following advanced diploma? Right? Anybody from HNB? By the can come on, can right? Anybody from HNB? No, no. I can't remember. There are some people. No, Nadika, where are you? Which bank you are, Nadika? You are from HNB, Nadika?
No, sir, I'm from Bank of Ceylon.
Yeah, correct. Anybody from HNB here? Janit? No, Janit from commercial. Anybody from HNB, Puta? Don't worry, I'm not going to ask question from you, right? I just get some information only, right? Nobody from HNB can't be, Upendra, you're not from HNB. Upendra, you're from HNB or?
Hello.
Yeah. Kumudu, you are from HNB.
Yes.
Right. That's what I can remember. At least one person from HNB. Right. Okay. Now, Kumudu, right? Don't worry. Yeah. I don't put you into trouble. So, are you aware about this case? The Sumudu Sanjeevani Nanakar versus HNB case.
You're talking about the candy matter, no?
Yeah. Are you aware of that? Huh?
Peradeniya.
I can't remember from where.
Yeah.
Huh? Right. You know the history behind that? The judgment.
Yes.
Huh?
But I think I
Okay, just what
No, are you talking about the incident
I'm
that
talking
just
about the parat execution.
Parat execution and they have published something. I mean, something against the HNB on YouTube channel. No, that is the case you are referring.
I can't remember exactly. Now this is basically Kumudu.
Yeah.
It is Sumudu, not Kumudu, right?
No, I'm Kumudu.
No. Kumudu, I am referring to the Sumudu's case, right?
No, I'm not. I can't
Okay.
remember that.
Okay, just one, right? Now, this is a interesting case. Now, that is the issue. Maybe a lot of when you are going to now at the moment, please temporarily, central bank has requested all the banks not to execute the parate, because of this situation, so that you
Yes.
are aware, right?
Yes,
Because central
well
bank
aware.
has given you not to execute parate because of due to this some issues, right?
Yes.
But now this is the case, Puta. Now I will just show you the case. Now think about the basic thing. The judgment was given. It is not given your handout, right? Judgment given is three judges: the Cicera Abru, the Diabru and Anil Gujarat and Nalin Pereira, the three Supreme Court judges. Now, that's a very interesting case. Now, see how they prove how unfair the case, unfair the part execution. That's a very simple one. Now, say there are two people, A and B, right? A took a loan, right? 8 million. I just give you for simple understanding, right? 8 million. A took a 8 million loan. B took a, right, 4 million loan. Okay, clear? 8 million, A took a 8 million loan, B took a 4 million loan. Now, A is regularly pay their payments, installment. And now their balances has come to around 4 million, say for example, 4 million. Due to some issues, maybe personal issues, maybe some reason, if not in a position to pay more installment after 4 million. But in the same way, a guy who took a loan for 4 million, he has not paid any installment. Right? He not paid installment. Just because of Parat execution, I file actions against whom? Under whom? A.
Person who had taken 8 million.
8
No?
million. But he has paid less than that person.
Yeah, it was less than 5 million.
5 million, no? So
Yeah.
now this is very unfair, no? The guy who paid, right, 4 million, and we try to recover his loan, but whereas the guy who has paid took 4 million is not paid any cents, we cannot execute for them. Right? That is the ground base the judgment was given. Right? So therefore, all banks are having some problem of executing Parate at the moment.
So now is anyways it should be more than 5 million. No, at the time of you are taking the action,
No.
the capital should be more than 5 million. No.
Yeah. That is
After
the
that only that.
principal amount.
Yes.
Now that is the decision. No? I mean, now the guy who gave less than 5 million, right? We cannot execute. He has not paid any cents. But the guy who paid, who took a loan for 8 million because he's above 5 million, but he has paid almost less than that B person, but we are trying to execute to that fellow, not for this fellow. Right? So that is the argument. Right? The principal amount refers to Section 5A of the Recovery of Loan by Banks Special Provision Act 4 of 1990 as amendment, not a static amount, and that a calculation necessary to determine the principal amount borrowed due at the time of default based on the loan installment already paid. That's a question. Right? So in the present case, the loan granted rupees 5 million. The unpaid amount of the loan, including the interest according to the resolution, is 4.4 million. So therefore, the balance of the principal amount, the loan you own to the bank, should necessarily be less than 5 million. Right? The defendant bank has passed the resolution on 6/12/2008, right, to execute the mortgage through the public auction. Right? So when consider all the aforementioned matters, so judges say, I am in the opinion that the plaintiff's appellant has put forward a strong prima facie case, then should the court issue an interim injunction saying like that. Right? They stop of mortgaging the Sanjeeva's property. So then what happened? Now a lot of people are maybe not aware this issue. So then if you put an advertisement, now you know now I think you may aware about the execution, Parat execution procedure. No, first you need to send letters, and then you need to, if you are not answered, right, then you need to put up press advertisement, gazette notification, and then you are not respond. Only you go for public auction. No, then you have the public auction. If you can sell it more than what the loan amount, you recover the other necessary cost incurred by you, and if you have any excess, that you may pay to the Sumudu and all. Right now, after this incident, it can be challenging. If you execute, they can quote the decisions given by this Supreme Court against Sumudu, Sanjeevani Nanayakar versus HNB. Because the judgment was given favor of Sumudu, what happened? You cannot execute the Parat. So then, if you are going to apply all these things, there is an issue. Now, that is why sometimes you won't see any Parate cases published in the newspapers, right? And anybody can challenge with this case. So, there's an issue about the Parate execution, right? Because of judgment given this favor in favor of Sumudu. Even though bank can execute, but then the lawyers of Sumudu has explained how unfair to Sumudu in that case, right? So I'm not a lawyer, right? But I have learned and what I've gathered information from the lawyers, and this is the situation about pertaining to Parat execution. But Parat execution is there, there are three ways. No, we need to have a loan. We need to execute. Why we regulate? If somebody asks, why regulate? Why so much of regulation for bank? There are 4 reasons for that. One is to protect customers. So now, in order to protect customers, we have enough things. What are the things we have? You have a customer charter, right? And this is nothing to do with credits, but you to understand, right? We may have a financial ombudsman, and then we have a credit counseling center, right? Are you aware on that, right? Crowd Credit Counseling Center. Now, if a person who's having some problem, he can go to the credit counseling, and then you can get an support from credit counseling, and then try to sort it out. Then you may have financial ombudsman, credit counseling, credit customer charter, right? Likewise, there are many more, even for consumer credit act, as well as our consumer authority, right? All are, even though they are not much attended to the bank matters, even we can make use of consumer affairs authority. They also have the right to attend to these financial matters, but nobody is going to be there, right? Various reasons, but they also can interfere financial matters where they are not prohibited. They are not only going to check the bread and loaf and what you call the paddy and all. No, even they can interfere to the financial matters, right? Okay, so there are some more laws to protect, even for banking, and to protect the customers. Then also we need to protect the financial institutions, right? The financial institution need to be protected. Now, why? Especially like Parat executions. Because if you are going to have a normal civil law, right, we take the short-term deposit from the customer, so we grant long-term credits, right, to borrowers. Then, if they are not going to settle, if everybody try to file action under civil courts, you see the issues. Then we have to have a all problems with delaying settlement of law. So that is why these Parate executions also came to protect to some extent to your financial institution. Right, then there are top of that we have a liquidity requirements, capital adequacy requirement, corporate governance, integrate risk management methodology. You need to have basically to protect the financial institution, though even for accommodations and things like that. Then one way we need to protect the financial systems as well, right? When you're issuing a check, right, and everybody need to be accept the check. That is why another law came with these what you call, if you're issuing a check without having the money in your account, right, it's become a criminal case, right? Earlier it is not that. Issuing a check without having the account is a criminal. So therefore, by amendment to the normal Summary Procedure Act, what happened? Thereby, people reluctant to issue check without having the fund. There is a law. So therefore, what happened? Ensuring that when you issue a check, and checks must be very much important. I mean, it's a recognized check. That is the protecting the financial system. Now, if you give your card or credit card to somebody, the other party need to be accept that credit card. Wherever you go, which country you are going, neither. So they will accept, no. Why they accept? Then only you have a trust of the financial system. Okay, right. There are laws also to strengthen the financial system, payment and settlement. Now, the issue comes with signatures, right? Electronic signatures. Now, fintech issues. Now, government going to come up with some laws with regard to accepting the electronic signatures when you open LCs and things like that. Okay, that you need to understand. Then again, why we have a regulation to protect the bank cannot use the cannot be act as an laundry, right? As a laundry to clean the dirty money, right? That is why we have a Financial Transaction Reporting Act, and that is why we have a Money Laundering Act, Terrorist Finance Act. All acts are there to not to use banks for dirty works, right? So now you see why we have an act, why we need to have a regulation. Okay, so therefore parent execution in that sense, right, is used here to protect the financial institution from willful defaulters. Okay, so when you are granting loan, what is the, now since if there is something here, that's an important thing. Now sometimes if a customer comes to take a loan, okay, maybe his value may be 7 8 project value may be around 7, even for 6 lakhs, so maybe 6 million or 7 million. But if a person requesting for a 4.5 million or maybe 4.75 or even for 4 million requesting only, then you need to think twice. Why he's taking 4 million? Why he's taking 4.5 million? Because he said, I will contribute the balance. Okay, good heart he's telling, but what is the interior motive? He knows he cannot execute. Bank cannot execute the parade if I took a loan more less than 5 million. Now he comes with the intention of defaulting. So at the interview, so when we have some proposal, so you need to look at it, those aspects as well. Clear now, right? So you need to look at it, certain expect on that also, right? Why? Because if you're trying to grant a loan less than 5 million, he is well aware he is not comes under the product execution. So his intention is to default. So there, of course, you try to give more than 5 million. right? Those are very simple things, but those are some practical issues, right? Okay, so then moving back again to our next area, then again we'll discuss about the regulatory aspect, about the regulatory regulations and the credit. Now, as the regulator of the Ibsl bank, now the central bank has imposed major regulatory measures on bank liquidity risk management, right? What are the uh, initiatives, or what are the actions taken by the central bank? Statutory liquidity asset ratio. Now you know what is the amount you need to maintain as asset requirement, right? Uh, what is the amount you need to keep with you, right? Okay, we will discuss. Then you may have a liquidity coverage ratio. Then you may have the net stable funding ratio, right? And you need to have a good liquidity risk management framework as a part of regulation. One is the integrated risk management. You may also have a contingency um, plan, right? Liquidity plan in your organization, and also central bank may grant you some under the bank rate for facility lender of last resorts, right? That's the bank rate you're using to give. Now, if you look at it, the regulatory requirement on liquidity. Now, SLR usually you know the how you calculate the total liquidity assets daily average, total liabilities excluding contingent liabilities is around, you calculate that statutory liquidity requirement. So 20% you need to maintain. Now that is why you cannot give loans more than 80% of your money. Why? Because you need to allocate 20% as a SLR. Only you can grant up to 80%, right? That now you may understand why we bank will give only 80%, right? So 20% you need to keep as a regulatory requirement. Thereby, right, through the regulatory requirement, you are basically restricting granting loan amount. One factor. Then you may have recently under Basel III, uh, they introduced the further strengthened of the bank. They said you need to have a, they introduced the liquidity coverage ratio. Now, the liquidity coverage ratio is basically for a short term liquidity requirement to be maintained by the bank, right? It's the 30-day horizon, and this basically help him to sufficient liquidity available uh, to bank to offset any net cash flow outflows encounter under very acute short-term stress scenario. So you need to maintain that. So now at the moment, because of that was introduced in 2015 on staggered basis. Now from 2019, it's supposed to maintain 100%, but due to this COVID-19 situation, this liquidity coverage ratio has come down to 90%. So that also why they have reduced to 90% from 100% regulatory requirement, that excess 10% also can be granted as a credits, right? That is the main reason. So therefore, next one is the net stable funding ratio. Net stable funding ratio mean usually like the short term. Now banks also need to maintain certain liquidity for long term requirements, right? The long term requirement usually we call them as a 1 year period, right? From to contingent liquidities may be arising due to off balance sheet commitment, right? So you need to keep some liquidity with the bank. So in that tension only, the regulators introduce the net stable funding ratio. Now that ratio also meant to need for 100, but again that also bring down to 90 because of temporary due to meet this COVID-19 situation. Right now, these two new ratios introduced by the central bank. What is the main intention? The main intention is to make the more stronger the financial institution, and those things will limited the liquidity. I mean, limited the credit, right? So these introducing these new things also impact the granting credit, right? Okay. Then again, recently, I think most of you are aware, central bank was introduced the domestically significantly important bank category. Now it is so you have a global significant important banks. The central bank also introduced a concept called the domestically systematically important banks. So in line with the international standard best practices. So before in 2019 December, uh, so we had I think six domestically systematically important banks. They have identified based on the asset base, right? Earlier, these significantly systematically important banks identified as a based on the asset base as or more than 500. They considered all these banks are significantly or systematically important banks. Right now, that criteria was changed in 20 December 2019. Now the domestic systematically important, I call DSIB, right? Uh, uh, Further analyzed, and they took certain factors into account, right? Like size of the bank, then interconnected of the bank with other people, to what extent that bank, something happened to that bank, um, uh, basically, uh, mm, how to what extent you can substitute that bank, replaced by that bank, and all the complicity, the dealing with businesses with other external parties and internal parties. Those are the four multiple factors took an account by the central bank to identify what are the domestic systematically important banks criteria, right? So therefore, all the Sri Lankan banks we discussing, we have 30 banks, and from 23rd, I think 23rd December in 2020, they have identified um, uh, four banks as an domestic systematically important banks, right? Okay. So now, so when you, I think you are aware, usually when you have a bank, when you're calculating the capital adequacy ratio, you may have a some sort of a um, conservation buffers, right? Now this is in addition to those buffers. You have a recycling buffers, you have other counter cycling buffers, like that. Now this buffer they introduce. Beyond that, other banks also have to have those other buffers, but they introduce what you call higher loss absorption requirement as a capital surcharge. We call HLA, right? So that is the basis they took to determining the domestically systematically important bank, right? They also look at it, some other factors, size, interconnected substitutability, and complicity, and they identify, right? They add some more requirement to the capital adequacy to determining domestic SIBs. Right now, banking and directions on capital requirements under Basel III, therefore amended to incorporate additional HLA requirement in the form of common equity T1 DBS. Right, I think you may know this one, or you are going to learn in detail. Now, these four banks, mind you, these four banks, mind you, the carried around 55%, right, of the total asset base in Sri Lanka. Now, this is how I think there is a small change you need to be done. This is not 2.52 and 1.5. Please adjust it accordingly. The instead of 2.5 is 2, 1.5 and 1, right? Not this amount, right? 1, 2, 1.5 and 1. Okay, that is the high loss absorption requirement. This is how you categorize the systematically important bank. Now, based on the criteria as mentioned above, banks will be assigned with the scores and will be categorized into three buckets. Right, they are given 40, 40, 20, like that for above characters, but that characters are size independent. The um, the what you call the size interconnectedness, and then the substitutability and complicity, they have allocate certain weightages, right? And then they have come to a certain criteria. So all these domestically, systematically important banks, right, have a three buckets, right? So in Sri Lanka, they have put into the three brackets. One is bucket 1, bucket 2, and bucket 3, right? So the banks who comes under the bucket 1, under systematically important bank, they need to have an additional 1.5 as an to the CF, right, common equities T1, 1%, in addition to the normal capital adequacy, which is including of other buffers. And then bucket 2, banks need to maintain another 2%, another 1.5%, when the bucket 3 is need to be maintain 2% loss option capacity, right? Okay, I will explain to you a little more in detail. Accordingly, in this criteria, there are four domestic systematic important banks, DSIBs, was identified by the central bank, and those four financial institutions or banks having around 55% of the total banking assets. They join 55% of the total asset base. That means what is the total asset base in Sri Lankan banks? Is something close to 16 trillion, right? So out of the 16 trillion, 55% is enjoyed by these four systematically DSIBs, right? Okay, so this is how they work it out, right? Now, DSIBs are required to maintain varying higher loss absorption requirement, ranging from 1 to 1.5, and then for 2%, right? Now, CBSL has named State Run Bank of Ceylon and Private Commercial Bank of Ceylon as the most important bank in the system, which require higher loss absorption capacity charge up to 1.5. In the bucket 2 category, so they put under the bucket 2 category. So what is the extra capital they need to maintain is around 1.5%. That will be at the your CET1, that is common equity T1. You need to add that. Okay, so then so in Sri Lanka they have identified there is no bucket 3 banks based on that criteria, right? That criteria is size and all. So we don't have that bucket 3 category still. So therefore, we have only two bucket categories. The two bucket categories are you need to have a higher loss absorption capacity of 1.5 and 1% extra, right? So therefore, People's Bank and Hatton National Bank have been identified as the bucket 1 category of DSIBs. Earlier, we had 6 banks, right? Even Sampath also included. But now in the present calculation way of central bank as domestically significantly important bank, now we have only 4 banks have identified as DSIBs. Okay, right. Now accordingly, now the requirement is here. Now capital adequacy ratio to be maintained by those banks 7%, that's the T1. For that you need to add HLA, right? Then T2 include 8.5, you know how to calculate this. And then all these DSIBs need to meet 12.5 plus HLA, whereas all the other 26 banks prevailing in Sri Lanka, they need to maintain only capital adequacy of what? How much? 12.5. Now, because of this COVID, that was further reduced to 13 and 12, 13 and 13.5, but usually this is the ratio, right? So all these banks other than the domestically DSIBs need to maintain the capital adequacy ratio of 12.5, whereas those 4 identified by the central bank with their calculations and their criteria and all, technically they have identified 2 banks as a bucket 2 and the bucket 1. So bucket 1 banks are, we call them as the HNB and People's Bank. They need to maintain 12.5 plus HLA. That is, HLA is what? In People's Bank case is how much? It is 1%. Whereas the bucket 2 category, you need to maintain capital adequacy ratio of 12.5 plus HLA. What is the HLA requirement for Bank of Ceylon and commercial bank to be maintained is 1.5. So therefore 1.5 add to 12.5, how much? 13 and 14%. So all other banks considered as, that doesn't mean they are not important, but they are not categorized as domestic systematically important bank. So they need to maintain 12.5. Now, with these introductions of this, what is really happened? By this real introduction of this manner, you need to have a more capital, you need to allocate more money for this. So therefore, these banks also limited of issuing restricted of issuing credit, right? Okay, I think have you understood how you how the central bank is categorize the domestic systematically important banks, right? හරිද තේරුණාද? Clear, right? So any Kumudu, you're okay? So are you aware on that how the central bank was categorize these banks? Clear Deka? හරිද? Kumudu, you're okay? Right. Tanuja, හරිද? Tanuja, you okay? You understood?
Okay, sir.
ආයි කියන්න ඕනේද? නැත්නම් දැනගෙන හිටියද?
දැනගෙන හිටියේ සමහර ඒවා දැනගෙන හිටියා.
Right.
Now I'm very clear.
Right. Thank you. Now, Chandima, you're okay? So now you know how. Okay, now you may aware which bank category you are. I mean, you are belong also to, right? Now earlier we discussed whether you are in the large bank, middle bank, or smaller bank. Now you know whether your bank is systematically important bank or not. I want to tell you that doesn't mean your bank is not important, right? Because why they identify as a systematically important bank? Because those banks um, are basically represent around 55% of the asset base. So having identified by the central bank, these are domestically systematically important bank. one thing One thing is central bank may have a close supervision about these banks, very much close supervisions of these banks, and they always look at it their the risk aspects, whether they are really following good risk management framework or risk management process, whether they are having maintaining enterprise risk management approach, right, and corporate governance approach, right. So central bank pay more attention to this bank rather than other banks. They pay more attention, right. That is why they add some higher loss absorption percentage to those banks. Okay, right. Now that was there earlier. We have a different issue. So we have a six systematically import domestic banks, but now under new category, they have not taken into account the asset base, but they have taken other criteria like size, interconnectedness, complexity, and things like that. And they have taken that is how the global banks also identify systematically important global banks. So they're the same, right? I think you may now have a clear understanding. Okay, Dulanjali, you're from PIP Bank of Ceylon.
Yes, sir.
All right, you understood?
Yeah.
Right. Okay. Right. So now we move into the most interesting topic, right? These days, people are talking about what? The credit ratings. Now, what happened to credit rating Sri Lanka recently? Can anyone give me an idea? What is the hot news about the credit rating? Anyone? What is the hot news about the credit rating? No? You don't know? My goodness. Can anyone tell me what is the hot news about the credit rating? No idea? I think you are aware about the Modi downgrade Sri Lanka rating. Are you aware on that? From October 28th? You're not aware? Sure there? Huh? Sure there? Are you not aware? Tell me honestly, Chandima? You are not Chandima, you are not aware? Anybody? So Modi has downgraded Sri Lanka from CAA 1 to 2. So they have one not down again, right? They have given enough reason for that, why they reduce one dot, and then the central bank make the presentation for that, and they said it's very unfair at the stage of introducing the budget. Usually you may not do things like that, right? And they said we have taken enough precautionary action on that. So what one of the main reason is Modi highlighted to reason they have given for downgrading the Sri Lanka. Reason they have given the comprehensive absence of comprehensive financing to meet the government's forthcoming significant maturities in the context of very low foreign exchange reserves. I think I have discussed with you. I don't know whether with you all or not. Sri Lanka in until 2026, we need to pay around 25 million not US dollar billion of US dollars, right? In January, we need to pay 500 US dollars billion, and in somewhere in August, we need to settle another 1.5. Sorry, Yeah, 1.5 US dollars billion. So, and every year at least 4 to 5 billion we need to pay as a debt, right? So that is the reason they said. So our inability, then the government put forward. So we have a plan, actions plan. So how we are going to strengthen our reserves, right? Okay, so then again what they said, these reasons given by the uh, outlook of Sri Lankan ratings, according to the Moody's assessment, uh, because of uh, we are facing a little bit of difficulty in settling all these loan, and they are not happy with the plan the government has taken, and our present capital, the reserves is something called around end of September is maybe around 2 billion, and usually you need to have that is enough for maximum of 1.3 months. And we also had the same situation during our war situation. Our reserve ratio has come down to 1 billion, and then during that time, the special drawing rights, right? We got a special loan from IMF, and we sort it out that matter. Okay, so that's a big issues. We'll talk on that. So that's a present rating issue. Right now, with this current this backdrop, right? We may going to discuss. So need to know about the credit rating, right? Now, if you talk about the credit rating, and credit rating is an credit worthiness of an borrower in general terms with respect to particular debt or a financial organization, or maybe it can be for a country, and it can be for a sovereign government, and it can be for a instrument, and can be for an individual, and also for some financial organization, right? Now, credit rating, so therefore, can be assigned to any entity that seeks to borrow money, right? For as I explained to you, there are two types of credit rating, and one is we call the external credit rating, and we may have an internal credit rating or internal risk rating, and we may also have all the, I think you may aware, in Sri Lankan banks, you need to obtain credit rating from uh, another. All the banks need to obtain a rating from a local registered, central bank registered um, credit rating agency, right? So that's, I think you are aware, right? I think you need to take some sort of a credit rating agency, uh, uh, and those ratings you need to uh, disclose to the public in your branches, as well as whenever you carried out the any advertisement, you need to show uh, this credit rating to your customers, right? Recently, uh, just can't remember the name. Recently, in I think in somewhere in September, right? The central bank introduced a new rating agency to Sri Lanka, and where you also can obtain the rating from that particular institution. What is that rating organization? Are you aware? Right? The
Lanka
central
rating,
bank. Yeah. What is that rating agency?
Lanka rating agent.
Lanka rating. Yeah, I think so. Right. Lanka rating. So from September, no, I think banks can obtain rating from them also. Now we are referring to the international rating agencies. Now there are two types of credit rating as explained to you: external credit ratings and internal credit ratings. Then there's a rating methodologies. There are two rating methodologies. Now one is point in time rating. That means at any given point, you evaluate the particular institution or country or uh, uh, country, the what you call the institutions or whatever, right? That is we call point in time rating. At any given time, this is your organization creditworthiness. Then there's another method we call through the cycle train rating. That means you are going to look at it, not only the present situation, but maybe your future situations, right? These are the two methods of methodologies you are using for rating. That is what you call probability of default. I think you may going to learn all these things, right? How to calculate the probability of defaults later on under separate subject. But rating also apply that. Now for sovereign rating, in other than that, they may look at various factors, right? They may look at it how the environmental, social, government consideration, and they talk it out about ESG credit impact, right? Then they talk about the other aspect like the governance aspect, the governance credit impact, governance credit impact, then social risk impact, then environmental risk impact. All they take into account, right? To what extent the country may look at it in these ESG factors, how they address all these things. According to the Moody's statement with regard to downgrading, they said all our those impacts are negatives. That is why they downgrade from C11 1 to 2, one notch down. So you imagine the moment you reduce all these things, it's badly impact our borrowing, and then nobody's going to takes. And sometimes you will some people are thinking about the modern monetary policy, MMP. MMP, the modern monetary policy, they said you're not going to issue sovereign bond, right, to pay debts. And what you can do, you can print the money. And that's a modern economics, a modern monetary group of people are talking. So we don't want to go for sovereign bonds, and we can print the money, right? So two school of thought. Now some people are telling now government is applying that method, right? The printing of money approach, right? So there's argument for both ends, whether it's a traditional monetary policy or a modern monetary policy. The modern monetary policy is telling you don't want to go for bidded instruments, you go for money printing. Okay, right? Can both are having some positives and negatives. That leave it uh, right on that point, right? Then there are two methods where we're going to use the through the life cycle rating and point in time rating. There's a methodologies, and we don't want to go in detail to study how these financial institution instruments are rated by those international uh, people, right? So what is external credit ratings, and also remember, you need to know about these credit rating agencies. Basically, it is not this full solution. It is not the panacea, right? And it's always is won't tell you to depend on this. It's give you a sort of a directions only. So management need to take a decision. I will give you a sort of direction, right? Then a rating is assigned by an independent company that evaluate the financial conditions of a company uh, with regard to debt, and basically we talk about the credit worthiness. Then the credit rating is also uh, is an evaluation report of how well or bad a particular company, or in that matter for country or instrument, uh, term in particular market or industry, right? How they performing, and usually most of the time, more or less, they look at the quantitative aspect. But remember, the credit rating may evaluate you both quantitative and qualitative aspects, as that is what they look at its country ESGs, right? So, if you want to get a higher rating, what are the factors influencing the change in the credit rating? Ability to generate sound, stable earnings and the capital over time, and prevailing political stability in the country, right? And then the consistent earnings, all we look at it if they want to have a higher rating, right? Then if you want to have a low rating, so you may look at it major legislative changes, how it impact your industry, significant decline in company's profit, and how they adhere to the government's governance structure, right? If they're not good, all these things, the ratings can come down, right? Now that is what happened. I little while ago I'll explain how Moody downgraded. They now remember the any organization who downgraded need to be given reason for that, right? You can't just say. So they have to give a reason. So the counterparty can also argue on that. But then, I mean, who's going to listen to all these things is the issue, right? Okay, so we had put some statements recently about this downgrade, a recent downgraded from CAAA 2 to 1 to 2, and the central bank also make a note on that and make a statement that it is rather unfair. We have taken adequate precautions to handle all these low rating issues, but they may not touch the qualitative aspects of that. That's the thing. They only think about the quantitative aspect, how you strengthened our reserve, but the qualitative aspects not much touch. To my, I have read both report, Modi's rating actions as well as the government response. Okay, so let's leave that. Okay, so the credit rating agency, as you well aware, is an independence organization. Usually, you may recognize, and then uh, a recent past, there are a big issue about the credit rating credibility. Now that was especially took place after the 2008-9, right? 2008-9 world financial crisis, and the lot of organization issues, a lot of complex new financial instruments like the securitizations, right? Asset-backed securities, and so many things they have introduced, and all these instruments need to obtain credit rating agencies, a rating from the perspective of credit rating agencies, they need to give a rating for those financial instruments. Now they have rated high. So despite the fact of all this, these products were failed. So then a lot of people criticize the feasibility of getting the credit ratings. Okay, that's a issue. So the credibility of the credit ratings may comes down because after the world financial crisis, and the three leading credit rating international bodies, right? Basically from uh, Standard and Poor, Fitch, and Moody. Oh, these are the three leading ratings in the world now, right? I think you may aware. So we have around 150 odds. Okay, 75 credit rating agencies in the world at the moment, right? Around 75 credit rating agencies in the world. But even though we have around 75 credit rating agencies, these three credit rating agencies occupied around 85% of the market, and most of them are American based organization, and people say their decisions are also little biased towards that end. So that's the pros and cons of these credit rating agencies. But credit rating is an important thing, it's an overall principle, because you can get an idea right now. For an example, uh, organization and countries give loan. Always when you're going for a obtain a loan, what happened? All informations are asymmetric, right? I think you understand what I'm telling, right? All are asymmetric. Asymmetric mean only one-sided. I am the borrower. I'm not going to tell you everything to you know, right? Always asymmetric. So therefore, when you're going for a international dealing, there's an independent body must come forward and justify your credit worthiness. That is the main objective of credit rating. Actually, the first credit rating came from 16 for merchants trade purposes. They give loan. They want to find out individual credit worthiness. That is the credit rating was originated, right? And after sometimes it was introduced into the countries, and then introduced into the instruments, and then introduced into the individuals. Actually, it started with the individual, then move into other areas like country, the instruments like that. Okay, so I think now you have an idea about credit rating, and it is an overall good thing, right? It is an overall good thing that facilitate uh, unknown party, right? It facilitates an unknown party to obtain a credit, right? As I explained to you, even though we have around 75 watts credit world rating agencies, but all these three rating agencies, the Fitch and the Moores and the what you call the poor Standard and Poor, are representing around 85 to 9, almost 85% in the world credit rating market. Now, who's regulate Sri Lankan credit rating companies? Can anyone tell who regulate the ratings companies in Sri Lanka? Any suggestions? Who rating the credit rating agency Sri Lanka? With the central bank? Yes or no? Anchana, who is regulating the credit rating agencies in Sri Lanka?
Central bank or the script?
Huh?
Crib?
No, no. Those three could be something different, no, Butta? I mean, credit rating agencies, we banks need to obtain, no? So who? It is
Which
the exchange commissions, right? Securities exchange commissions managing, not central bank. Okay. Like, so we need to also understand, right? That also, right? Uh, so these are regulated by regulatory commission. Okay. Another important things I want to share with you now. Now, reason I don't ask me which bank. The people who are working in that particular bank may be aware. Uh, Recently, maybe not recently, maybe 6 months or 1 year ago, one agency, the three out of three agency, they have degraded, I mean, reduced their ratings. The credit rating agency you used to take that rating, they have reduced, I think B minus or something, one grade, one not, they reduce. Right? People who are working in that bank must be aware. But that is not a good thing, no. I mean, you're reducing the rates mean so your credit worthiness is losing, no, and that shows your bank is not doing well. It's an indicator. If you have a triple A like that, you have indicator. No, some people are marketed that no, only triple A bank in Sri Lanka like that. Okay, so one bank downgraded. Now, what that particular bank has done it. Now that bank has gone to the another credit rating agency, right, and got the early rating standards. So that's the issue of the credit rating agencies also, right? Though in a position to obtain that credit. Now it's like this. Suppose your branch may be, it's a similar thing happen like this. Now the branch may be rejecting certain loans, but the same customer go to the head office, some banks, and got it approved. Right? That's something similar to that. Some organizations, some customers, the some maybe the branch may be reject, but that loan approved by a head office people, right? Something like that. There is some real life situation incident happen as per the credit rating is agency. So that's the reason why the credibility of this credit rating in Sri Lanka also to some extent has deteriorated. But as for the central bank requirement, as for the customer charter, central bank mentioned through the customer charter, every bank need to obtain a credit rating, and that has to be disclosed in your branch, as well as wherever you're going to market your products, you need to disclose your ratings. Okay, right. So then, so this is the normal ratings offers. Now there is some speculative rate and the investment rates, right? So all these rating agencies, they have a some point where you have an investment rate. There's a cutoff point, and this others are speculatory rate. Now the once it's come to the speculative rate, what happened? So usually, as I don't want to explain all these things, you need to when you're going for a borrowing or issuing bonds and things like that. So what happened? So you need to pay little higher interest rate. So you need to pay more premium in that case, right? So that is why organization try to maintain this particular level, right? If you go beyond down, then the risk is going to be higher and higher, right? So then you need to pay more cost when you're going to borrow. So that is what these two rates indicated. Then you see the comparisons of credit rating agencies by the three world organization, Moody, how they call. Now you look at it where now we are, and according to the Moody, we are in the CA2. Now what is CA2 mean? According to that criteria, we are at the substantial risk, right? Substantial risk. And if you really look at extremely speculative, So that means we have in a problem of settling the dues, but the government said we settle it. Yeah, yes, correct. We are at the moment we are settling. Now that is why the government argument, despite the fact of all these things, right? We are settling the loans. So why we are downgraded? And that is what I explained to you. We need to understand that is not the only criteria. Why? Because the rating, we look at it with different areas. They look at it 4 areas before you rating: the business analysis, the financial analysis, management evaluation, and the fundamental analysis. Now, this is for an organization, right? The same principle apply for a country. That is where we are missing. We always look at it only the one aspect. We never talk about the other aspects. So where is the other thing? The rating is not only one aspect. There are so many factors we are going to look at it. I have pointed out to you what Mood is saying. So when you look at the other areas, social risk, governance, as also we got negative. So we need to address that also. So government taken some steps to address those, but they not satisfy. The one thing you can consider, then this comes again the politics. These agencies are usually American in organization. That's one of the reason they criticize, right? So they are giving rating for ulterior motives and blah blah blah, right? We need to take in a different angle, because since we are students, right? Since we are non-financial guys, we need to look at it all these things in differently. So when you're going for a ratings now, usually external rating organization maybe look at it these 4 areas, right? And this is not a rating study, therefore I'm just briefly touch on the importance of credit rating for business. Now, credit is useful, as you well aware, for lenders to assess the creditworthiness of a borrower, and sovereign rank rating take into account the overall economic conditions of the country, and institutional investors rely on sovereign rating to qualify the general investment atmosphere. And it is good for individual companies and also debt instruments separately, and it's indicate opinion about the ability to honor. So I'm always telling the credit rating isn't given an opinion like audit opinion. The rating agencies never tell you buy this. They give you some sort of a opinion to you to take the decisions. Like our risk people. Now, always there's a conflict between risk and credit and management. No, what is that risk? Remember, business people need to take decisions about the credit, not the risk guys. Okay, risk telling you these are the repercussions if you give the loan to them, right? So therefore, business people must have an encourage, you must have a guts to argue on that. Don't always blame risk people. They say මුන් කවදාකවත් අපිට ණයක් දෙන්න හම්බෙන්නේ නැහැ. මුන් හිටියොත් නම් ණයක් දෙන්න හම්බෙන්නේ නැහැ කියලා හැමදාම රිස්ක් එක ක්‍රිටිසයිස් කරනවා ක්‍රෙඩිට් කට්ටිය. එහෙම නෙවෙන්නේ නේ. right? මුන් හිටියොත් නම් අපිට ණයක් දෙන්න හම්බෙන්නේ නැහැ. So that is not the case. So the business people need to take the decision. So you in a position to counterattack these guys. They tell you this is my position. This is if you grant this loan, this is what happened. Right? So are we maybe equipped with enough to take business decisions? Right? You need to know that. Then there are some limitations, as I explained to you about this external rating. and this downgrading issue. Right, there may be a relationship. We have, of course, there are enough experience. I quoted you something from Sri Lankan particular bank, right? How they have upgraded their downgraded rating, right? So some, I mean, then some regulator need to come into the scene in that case, right? So you are not allowed to do that, right? Okay, so then we have an internal ratings, right? The regulatory and supervisory methodology, and provide the flexible and responsive supervision, promoting safety, soundness of the financial institution. When we are getting outside, and we also need to look at it our internal rating, and we some factors we are going to look at it, index and inherent risk exposure, adequacy and internal control systems privilege in your organization, and the governance issues, right? There are so many factors you may going to look at it when you're developing your internal ratings, right? Okay, so then comes the issue of, I'm not going to touch much on that. Then there may be a issue comes, what is the difference between credit rating and credit scoring, right? Both are same, right? Then there is an issue comes, difference between the credit rating and the credit score. Are these similar? Now, the credit score and the credit rating most of the time use interchangeably, but they are definitely, these are two different things, right? And credit rating is used to determine the credit worthiness of a business or a company, or maybe sometimes the individual, right? Now, this essentially means the probability of them defaulting on payments. They look at the probability, right? Defaulting rate. The rating is usually shown as a series of alphabetical symbols like triple A, double B, like that, right? But a credit score is usual and using a statistical method and ascertain certain um, parameters, and they give in term of a score, right? Right, that's the main difference between credit rating and credit score. So having understand about the credit rating, so let also we now going to discuss a little bit of the crib, right? Crib play an important role for us, for bankers who are involved in credit. But the main objective of the crib is what? Now, the crib is main objective also. We have there are three, I can't remember, in the world there are three credit bureaus in the world, right? Change fix or something, I can't remember the three names, right? Like Moody and all, there are international recognized credit bureaus. Okay, so what is the main objective of the crib? Basically, to provide a conducive environment for people to obtain credit, right? That is the main objective, and also to facilitate distributions of credit to all sectors of the economy, right? And through the crib, sometimes we improve the integrity of the people who obtaining the loans, right? So creating the responsibility of the people and become credit worthiness. So that's one of the important area um, as far as the credit objectives are concerned. There may be a lot of functions carried out by CRIP, right? What are the functions they carried out? They may collect informations pertaining to customers and synthesize and provide these information to related parties. You can obtain I reports. Individually, people can obtain. The banks are involving in these credit ratings and before they granting the loans, and you as banks, and sometimes the CRIP also carried out some research, and there are a lot of function is carried out by CRIP. I think most of you are in the credit business may be aware how you obtain the informations about the customers before you granting the loan. So two things CRIP facilitate in, and the one thing is good for customers. Why it is good for customers? CRIP will improve the a CRIP report will tell the credit worthiness of the customers and make it easy him to get a loan. And from the financial sector institutions point of view, and it is easy to them to take a decision, right, to make them the decisions to grant a loan or not. Now, recently, the CRIP also, right now, I think CRIP was established maybe 90s, 25, 27 years ago, right? But now, after so many years, the recently the CRIP introduced new systems called the CRIP score, right? Now, the credit score, which is issued by a Credit Information Bureau of Sri Lanka, request of a person to whom such information relates to is known as CRIP score report. Now, credit score is calculated by CRIP by the algorithm and based on following key aspects. Now, right, they will give um, different color codes. Now this is a legend. This is a scoring legend. Now they have identified customers or credit customers accordingly based on payment behavior, right? They look at the payment behavior, and they may look at the over indebtedness, then demographic details, utilizations of available credit, and then inquiries, guaranteed contracts, dishonored checks. So many factors they may look at it before they develop this algorithm. So before they develop this scorecard. Right. Based on that, they have identified, A1 to A3 as very low risk, right, based on credit history. And B1 to B2, they have given marks in different colors, right? Timely payments behavior, and average risk, higher risk, very higher risk. And then you have the gray color indicate that mean you don't have a sufficient information for you to take a decision. It's like a audit, right? Like an audit, difficult to give you something, right? Opinion on this, opinion about the audit of that particular firm. So these are some of the methods and recently introduced by the CRIP in Sri Lanka, right? In order to facilitate the smooth functioning of the credit business. So in Sri Lanka, basically, the CRIP play an important role, and most of the banks obtain the support from the CRIP to evaluate the customer, how good or bad, not only customer, but also the guarantor, right? Okay. So how many of you are using this method at the moment? Are you heavily using? So almost all banks are using. Anybody who are involving directly with the credit bureau? Anybody from here involving in directly with this credit CRIP? So you may have access to. Some people have given access to link with the name, so somebody can have the access depend on some authority limits of the employees they have given, so you can see their names and all. And this is a now value addition the CRIP has given. So I just not to explain the details of credit crib, but just to give an idea about the how important these things when you look at it, evaluating of a customer, right? Okay, so now then we move into the next one. What I will continue from where we have stopped. Stopped our area, and you may come across something what you call related party transaction, right? I think that's also important. Now, the related party transaction, also on regulatory aspects, this is a transaction that takes place between two parties who hold pre-existing connection, some common interest. So, bank in that directions will talk about the related party transaction. The related parties are identified as your own employees and subsidiaries and associate of the bank, maybe directors and key people, close relationship people, and shareholder having material interest in the bank. Right. Why we have a restrictions like related party transactions? Because in order to prevent obtaining some preferential treatment from that organization, right? Now we recently maybe again uh, maybe you may heard about stories about directors obtain loans at the very concessional rate from leading state banks. There are how, but then it's nothing happened. All are sorted out, right? So, what are the preferential treatment usually expected? Low interest rate, waive of certain specific rates, and providing the um, right waiving of some commissions, charges, and all things. So that doesn't mean, remember, a director can take a loan from a bank, right? So the director can take a loan from the bank, right? So then there is a methodology explained by the central bank. If you want director want to get a loan, how to handle. Now I can't remember all these things, but for my remembering, so what first you need to get a board approval, right? With the 2/3, right? If a director want to get a loan from a bank, right? And first thing, they need to make a percentage. You need to make a request from the bank, and the board of directors need to approve with 2/3 majority. And during the discussions about his paper, that particular board member not to be present at the board. That's normal thing, right? Okay, and then once the board may look at it whether they have reasonable reasons to obtain a loan, ensure that they won't get any concessions, like all this preferential treatment not be given, and then only the 2/3 of board members need to be approved, and then that is not enough. So then it has to go to the monetary board. So monetary board does look at it whether the granting a loan to director whether is a reasonable and followed the rules and procedure. So the bank has taken adequate securities, and not only the bank, the monetary board also may look at it, right? The terms and conditions offering. And then if the monetary board is satisfied, the bank can give loans to the directors. So there is no directions given by the central bank. You cannot give loans to the directors. Can give directors loans, but provided that all these things happen, right? That is why we have the related party transaction. That's a direction, especially when it's concerned with granting loans. So that you also need to understand there is a bank regulation. Then it's come to the acquisitions and merging. I think you may aware about the acquisition and merging. Now, what is an acquisition? Basically, we'll talk about acquisitions mean what you mean by an acquisition. Take over one particular organization, uh, and then can be a two type, that is we call friendly acquisition and hostile acquisition. Now the friendly acquisitions mean so also you the other party is willing to give their holdings to that, or sometimes it's the hostile acquisition with the objections of the board of directors and senior management. One organization try to take over another organization, we call them as hostile acquisition. Other one is, of course, you know what is merging. Merging mean you develop, I mean you join two big same size organizations together, we call them as a merging. Now why I explain to you, right? When you're going for a acquisition and merging, what do you need? You need capital, you need some sort of a loan, and also you need to carry out due diligence. Now you know what you mean by a due diligence, right? So before you're going to take the uh, 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 organization, or whether it's for acquisitions and merging, especially the acquisition, you need to carry out some due diligence. It's like evaluations of a customer when you're granting a loan. So there you look at it various factors. Then you look at the financial matters, where the buyer will be concerned with all the financial statement, right? We look at the technological and intellectual property, whether they have some significant enjoying the intellectual property, and consumer customer and the sales, right? And you need to understand what is your bank customer. Suppose you take the bank, right? Customer base, right? How many customers, what is the percentage, number of accounts, all these things. And then you look at the strategic fit with the buyer, right? That mean basically whether this particular organization we are going to take, whether fitting to your existing culture, right? And then certain material contracts. So material contracts mean um, review uh, mm, the contracts, uh, enter into by your intended acquiring company with other parties, right? So you need to look at it, and also you need to look at it sometimes the employee management issues, uh, right? So are there any management issues with employees and all these things? Then we may look at any litigations, whether have a pending files, pending litigations cases, right? So once you take, you have to pay, no? So therefore you need to look at it, all these things. Any tax matters with unpaid tax is line, then the insurance issues, right? Um, right, so we need to sometimes take an insurance. You can take an insurance cover before you go in for a mandate, right? Then are there any environmental issues, that mean you make use of your processing will damage your environment. Then general corporate matters, usually um, about the organization, then the related party transaction, which I explained to you earlier, then any general government regulations, right? Uh, mm, or maybe a sort of a property. Mm, so whether it is that properties belong to the organizations or not, it's maybe a third party. What is a marketing arrangement? Right? Whether they have a good brand names, whether they have a better marketing team. Then you look at the competitive landscape, the competitive environment that particular organizations in is carried out their businesses, and other disclosure schedules, right? So which are attached to your normal normal mm, annual statement, right? So all these things you look at it, right? Because why we need to look at it, right? Sometimes when you go for merging and acquisition, what happens? We go for LBO, that is the leverage buyout, right? Now, what is leverage buyout mean? Leverage financing basically simply means finding a company or business unit with more debt than would be considered as the normal. Suppose you go for take a loan and buy this organization, and so that is what you call leverage buyout, right? For their, so they look at for more debts. So we somebody has to pay the debts, no, right? Give loan to take that particular organization. Then that credit organization may need to look at it to conduct this due diligence before you granting loans to buy that. You have a purpose. What is the purpose? Acquisition, right? So ultimately, if you grant the loan, so you need to look at it. So of course, the that particular organization may look at it all these aspects. Top of that, the lending institution also may need to look at it, all these things, right? That is what you call leverage buyout. So any organization uh, any organization so going to take the acquisition of the loan, acquisition of another organization, and they may look at it. They are going for a borrowing from organization. The borrower and the lender may look at it, all these due diligences, right? Now, in these methods, now how HSBC enter into the UK market, right? This is the method they enter into the entire UK market. HSBC is enter into the UK market, acquiring Midland Bank in England, right? So they have a well networked bank. They are not performing well, so that bank is called Midland Bank in UK, and HSB enter into the UK market by acquisition of this Midland Bank, right? Okay, like just telling you an example. So now if an organization is going to acquire your another company to improve your business, or maybe going for business expansion strategy, then he may going for obtain a loan from another party. It's called leverage buyout. So then the people who giving loan need to be understand, need to be carry out due diligence. So that's what I explained to you. What are the due diligence areas? That area banks need to be look at it, right? Before you granting any loans. Then there may be a requirement for regulating the informal money laundering business. In Sri Lanka, money laundering activities, money lending activities of licensed banks and other financial institutions, are regulated. But the informal money lenders are not regulated. Now, at the very beginning, we discussed uh, in the micro sector, microfinance. We have a microfinance act, but only 4 people have registered license, obtained the license to do the microfinance business. But we have enough and enough informal money lending business in Sri Lanka, right? They have a real impact to formal money sector, right? So therefore, money lending ordinance we had in 2 of 1918, the money lending ordinance, but it's not so powerful. And we introduced the microfinance act that also not covered enough. So, but in the informal money lending businesses play a huge role. So, therefore, we need to regulate this sector, right? The regulations of informal money lenders. one way to improve our customer protection, right? And at present, lot of informal money lending businesses do not report information on their borrowers. I mean, they are not compelled to do that, no, right? They won't get the information to Credit Information Bureau, right? So people, right? Not, I mean, there is no any formal authority to collect all this information. So what the information may be given by the central bank may be not the correct picture. We may have other opportunities in the informal market, right? So therefore, it is important to regularize this informal sector. Now, in order to do that, there is a proposed Microfinance Credit Regulatory Authority Act, right? Now they are going to, because they thought the microfinance prevailing present Microfinance Act is not good enough. So therefore, the regulators as well as the government, they want to have a separate authority, right? Even not under the central bank, it is a separate authority to come up with some rules and regulations, and comes under the Ministry of Finance. At some time, it may be there may be this proposed there must be representative from Ministry of Finance and Central Bank of Sri Lanka, and nominees of the governor to be board members. But they propose we may have a microfinance credit regulatory authority act in future. So that's a good signs to the formal money lenders, right? So then because of meeting regulatory requirement, and they can't just give loans as presently what they are giving, and then there's an opportunity available for formal banking sector to reach that particular sector and to grant loans. Okay, right. So these are the some of the new things you need to look at it. And also, mind you, you need to look at it another important area, that is consolidations of financial institutions in Sri Lanka. Right now, according to the financial sector, as we are well aware, it is an provide input or provide lot of supporter to the facilitate the economic growth in a country, and even not it's not it is also the same as Sri Lanka. And so therefore we have around 39 finance companies in Sri Lanka, and you noted that the total, even though we have 39 finance companies, and how much of credit granted to the sector by those registered finance companies are uh, almost less than 2 trillion, right? Less than 2 trillion. So therefore, it is important and they also, these finance companies, because under these conditions, because less importations and all, and they're not in a position to involve in leasing businesses, and their credit also further comes down. And top of that, they are facing a lot of meeting requirement established by the central bank, meeting capital adequacy ratios, capital requirement, and the liquidity requirements. They have a lot of issues. So therefore, central bank now, I think I feel it, right. This budget, they also can come up with something, or otherwise they may come up with requesting all these financial institutions to consolidate. Now, what is consolidating mean? So you join, it's sort of acquisition and merging. Join 2-3 organization with the powerful organization, or maybe join 3-4 organizations together, and then you are more strengthened with financial terms, asset base, liquidity base. And so we have enough, I mean, we have too much of financial companies, I think you may agree with me, right? So therefore, central bank is going for a consolidation. So therefore, motives of financial consolidation, there may be a lot of motives you can identify. One way, once you join together, you have enough capital and enough liquidity, so you can grant more loans in that case. And therefore, other motives, you can say the um uh, uh, basically say what are the benefits you can obtain through the consolidation. You can reduce your operation cost and things like that. Okay, so since the 5:30, and I will explain in motives little in details, because the guys are closing doors because they also want to go, no? Right? So therefore, I will touch on the importance of consolidations, and then I will next Saturday, next Sunday, we not start at 3:30 Puta, and basically we may start at that not our usual time. We may going to start around what time? 1:30. Please, your colleagues also. We be meeting next week as our normal scheduled time. 1:30. We'll go till we'll have a break, and then we may look at it the overview of apartment industry in Sri Lanka, and what happened, and what are the issues, and uh, some pandemonium issues, and positive and negative things when you're granting loans to these. What are the factors we need to look at it, right? We going to touch a little bit of next week the condominium, so apartment business, right? When you're granting loans, what are the areas? That's a booming area. So booming area also we need to understand that market as well. Okay, thank you very much. So we'll stop today, and we will catch you on next Sunday at 1:30. Okay, have a nice weekend.